Hey guys, what's up? Alec back with the daily stock market, and today we're going to be giving a big tech update because that's what you guys voted and that's what everyone wanted. And tomorrow we can either do an options video or an ETF video. The reason why I didn't do an option video today is because when I go into an option, I want to be very, very confident that it's going to be paying off. And sometimes if you do option over option after option, and you're not too confident on how the option's going to play out, you just think it's an easy way to make money. That's actually how you start losing money when it comes to option trading. So as far as option trading is concerned, I want to make sure that the time is right and my confidence in the option is high enough to take it out and suggest it on my channel. With that being said, this is our highest our account has been in the last 3 months. So leave a thumbs up on the video if your account is at an all-time high also. And comment below how much percent you're up in the last 3 months. But enough of that, let's get right into the video now. First up is Facebook, and look at this swing trader's dream. It goes up and down and up and down, and it's pretty easy to predict because Facebook goes below 250 a lot, and then it goes right above 250. As you can see, it's been playing the support and resistance since September, and this is one of my biggest positions personally. I have $3,400 in Facebook, and we're up almost 40% on Facebook. And I think Facebook can go higher, but I also think it can go lower. So I would probably want to be buying Facebook right around 250 or 260 if I don't have any money in Facebook yet. And I would want to be selling. I think that this one can easily be going to $300 again. It might just take a little bit of time, probably 3 to 6 months to get to 290 to $300 a share. I think is super realistic. Remember, they were at $300 a share back in September here too. And when you become part of my program too, you'll get exclusive emails like this one that I wrote personally, 11 reasons why I'm bullish on Facebook stock. And I will kind of just go through this one a little bit, just why I'm bullish on Facebook stock. Owns Facebook, Facebook Messenger, Instagram, WhatsApp, and Oculus, all under Facebook. The forward PE ratio is below 30, one of the best in the market right now for big tech. So none of the other PE ratios that we talk about are going to be below 30. User base is growing around the world every single day. The ad spend on Facebook and Instagram is also growing around the world. Almost all small business owners are advertising on Facebook and Instagram and will keep advertising on Facebook and Instagram too. Ad costs will increase in the future. So it just becomes more and more demand, and it becomes more valuable over time as social media goes on. They have over 60 billion in cash and cash equivalents, guys. 60 billion in cash. Easily could double digits revenue every year for the next 5 to 10 years, in my opinion. So they're one that's a pretty safe bet if you're looking at the next 5 years. In my opinion, I love Facebook stock. And people don't realize Oculus is going to be huge, and no one even realizes it yet for the VE and AR, augmented reality sector. I know Apple's going to be a big contender in that space also. So when we talk about Apple up in this video, keep that in mind also, that they're going to be huge in that sector. But Oculus, Facebook's already doing it. They own Oculus. And in my opinion, this is one of the best values in all the big tech currently. Apple and Facebook have a little bit of a rivalry going on because Apple can't monetize Facebook's app. So remember how Apple makes a lot of its money is monetizing the App Store in-app purchases. So when someone goes on their app and they buy stuff off the person's app, Apple gets like 30% every time. But remember, they're doing ads. Their small business owners are doing ads on Facebook and Instagram, and Apple can't monetize that because it's not an in-app purchase. So I think we can see that rivalry growing throughout the coming years too, so just keep that in mind. Conclusion, Facebook stock can double or triple over the next 3 to 5 years. It's a very safe stock and has a very low chance of decreasing over the next 5 years and losing money. So if you're looking at a safe place to park your money, this could be the long-term stock for you. And remember, this email was exclusive to my close friends list. So overall, as you guys can tell, I really like Facebook. I have a lot of money into them. and their market cap is almost $1 trillion. It's not quite a trillion. When we get to Amazon, for example, the market cap's like double of Facebook market cap. PE ratio is 26, so it's one of the best PE ratios on the list. The volume's pretty low. 52-week high is pretty good, also at $300 high. So next up on the list, we have Apple, and it's another one of my favorite big tech stocks that you should definitely be diversifying in. They're still down about 15-12% from an all-time high, so I think there's still a pretty good position to be buying them. Honestly, I like to buy them under $120 a share. My average cost is $123, and we have about $1,000, about 7.5 shares of Apple. Now, in the last year, in the last 5 years, they've had some explosive growth. So in the next 1 to 2 years, I don't think it'll be as explosive as this last year 100% gain was. I think that this year maybe they'll hit like a 30-40% gain, not quite 100% gain, which is very good still, 40% gain in a year. And it's more along the safe route. So you're not really gambling on losing so much money by investing in Apple or Facebook stocks or any of these stocks on the list. The good thing is that these are safer stocks, and the chances of losing your money over the next 2 to 3 to 5 years for long term is very, very low. Now, PE ratio on Apple is still pretty low at 32 PE ratio. Their dividend is getting up there. It's a 0.7 now on the dividend, which is actually pretty good for a company like Apple. Their market cap is $2 trillion, guys. It's double the size of Facebook, more than double. It's like 1 point something size of Facebook. So it's way bigger than Facebook. And look at that volume. It's 2 times more active in the trading community as Facebook. And their 52-week high, 52-week low is a very wide gap. And in my opinion, this will be a $300, $400 stock. Give it 5 years, and I think they'll end up splitting again too. And once they split, once they get to $400 or $500 and they split again, that's always a really, really good thing for the stock. Now, there is some interesting articles around Facebook and Apple too, but this one is obviously for Apple. Why one analyst think Apple shares still look cheap. Apple shares are getting a boost Tuesday from Evercore. Basically, they reached their price target from 163 to 175. They're thinking it's going to be going to. In an exhaustive 126-page report. Wow, that's actually insane. He wrote a 126-page report on a bullish thesis on Apple, and that's why he rose his 163 price target to 175. So basically, he thinks that they can have single-digit sales growth and mid-teen total return over the next several years, which I think is definitely realistic too. So 175 price target isn't the craziest thing in the world. And if he's talking about a few years over the next several years, which he said, then that's very realistic. The analyst notes that Apple shares had a strong year in 2020, rallying 81%, 5 times the return of the S&P, creating concerns about the stock's potential for 2021. In particular, as iPhone 12 cycle plays out, but he thinks the concern is misplaced. So remember, that was my concern too, is that they rallied so much in the last year that they might taper off for the next 1 to 2 years and not have some extreme growth. But he says that concern is misplaced. So if we read through the article, it might be good to read on your own time. Projects Apple can reach more than $7 a share in profit in EPS by September 2025 fiscal year, up from Wall Street analyst consensus of $4.45 a share. So this is interesting, driven by a combination of better monetization of those installed bases with services and wearables, gross margin expansion, stock buybacks, and new products. So the wearables will be interesting. So here he says that wearable business can expand to 70 billion. Right now it's only at 31 billion. And then he also said that he thinks that Apple can buy back close to 500 billion more of the stock through 2025. So overall, that's some great news on Apple, obviously, for the next few years to come. I think in the short term, it can ride up to $150 a share over the short term, and $200 a share over the next 3 years, I think is completely realistic when you have a long-term mindset for Apple and you want a safe place to put your money. All right, so the next one up is going to be Amazon. Ticker symbol AMZN, down 4% in the last month. And from its all-time high, you'll actually see that Amazon right now is down 11 to 12%, right? This stock can easily go back to $3,500 or even higher. And the good thing is if Amazon splits, which there's been no news about at all, but I think that it will in the next 1 to 2 years end up splitting. This will make the stock riot so hard and rally so hard beyond belief. So definitely be ready for that. Amazon is just one of those stocks you want to have in your portfolio for long term because the revenue growth is absolutely crazy. They're churning revenue growth every single year. And when people think that their numbers can't be any higher and can't do any better, they beat them every single time. Their revenue growth is absolutely insane. It's one of the best things about this company is the growth that they have every single year. Now you'll see I have about $1,100 in market value with an average cost of $30.70. And if we look at some of the stats on Amazon, the PE ratio is a little bit higher than Apple or Facebook, implying that Apple and Facebook's a little bit better of a deal. But the market cap is 1.5 trillion, so it's still smaller than Apple, but it's bigger than Facebook by double. The average volume, look at that. Look how small it is compared to something like Facebook or Apple. It's because a lot of people are afraid of this $3,000 a share thing. So once they split, I think that's going to do wonders for Amazon stock and trading the stock and pumping the stock and hyping the stock up. 3 million, 2 million has to be the smallest volume on this list. Maybe we'll get to Google. We'll see what Google is at. If we pull up some of the stuff that Amazon owns, you guys probably won't even know, but it owns Whole Foods. Amazon owns IMBD, owns Twitch, owns Audible, owns Alexa, and many, many more different services too. You can even see at the top that the drone is flying a package. So in the next 5 years, 10 years, when all that stuff becomes a reality, I think that Amazon can be one of the biggest companies in the world, and it's going to keep taking over the world by buying all these smaller companies and expanding into every different sector. And this isn't even half. I think Amazon is just getting started, and this can be definitely one of the biggest companies in the world along with Apple. Now, the next one on the list is going to be Netflix. We all know it. We all love it. Disney Plus is trying to gain on Netflix, but Netflix is obviously the leader in the space. That's why everyone's talking about Disney Plus being Netflix's biggest competitor, because Netflix the number one dog and Disney's trying to come up to number two. As you'll see on Netflix, PE ratio 85, market cap, look at that, guys, only 226 billion, so it's not nearly any of the size as the other ones. For example, Apple is 10 times. So Netflix would have to go to a price of $5,000 a share to match up with Apple's market cap. Because remember, a lot of people look at the share price and think that's what's important and that's the price of the company, when that's not true at all, guys. If you're in my course, you know to look at the market cap, which is market capital, and that's how much the company's actually worth. Market cap 226 billion for Netflix. So they're still a very, very large company, but nowhere near the size of some of the other ones that we talked about, the behemoths on this list. What you'll also see is the volume is very low, so not a lot of people are trading Netflix right now. But being pretty low, I would want to be buying Netflix right around 500, 450. I don't know if it'll get that low again, just because they've been reporting that their subscriber increase is growing substantially. And they're getting more subscribers, monthly subscribers. But what you'll see, Disney Plus is a global predator for Netflix subscribers. And Netflix is trying to make it so you can't log into several different accounts off just one account for family and friends. It really should be looking over its own shoulder so it doesn't get squashed by Disney streaming service. We see Disney Plus, it's a global predator for Netflix subs, reaching 100 million subs just 16 months after launch. It took Netflix 10 years to reach 100 million subs, but that's not really comparable because the day and age we live in. Streaming is a lot different now than it was 10 years ago or 5 years ago, and Netflix started off a name that nobody knows about. Disney at least has their foundation, all of their classic movies. So Disney already has a huge name behind it. Netflix ended 2020 with 210 million paid global subscribers, right? And they share accounts. So if they stop having people share accounts, that can easily double their paid subscribers because that's where they got their foot in the door. If they kick it off and people can't share accounts anymore, it's not like people are just going to go without Netflix. They're going to make an own account, a new account for themselves and still pay. And I think that's a good way to boost subscribers up also. If they do raise prices, they will lose subscribers, and that's by far the biggest risk to valuation. And I kind of disagree. I don't think if they bump their price $1 or $2 more up, people are just going to be like, oh, we're not going to have Netflix in our household anymore at all, because Netflix is a thing that everyone has in their household. So overall, Netflix is a great big tech stock, but I would probably look at some of the other ones first, like Facebook, Amazon, or Apple. I think are probably better than Netflix for the long-term valuation. But on the swing trade, you can kind of see they go down and up. Like in this time frame, that pattern is very typical for them to follow. So if they go as low as 475 or 450, in that case, I probably won't be able to pass them up for long-term growth. All right, so the last one we have to talk about is Google, and they have two ticker symbols, GOOGL and GOOG, so both of them are fine. I just like to do GOOGL because you're in the shareholders meeting, even though that has nothing to do with anything. It's just better to have options than not to have them. So with that being said, they go up and down, very good to swing trade or possibly option trade, because as you see this, when you see the stock price doesn't move that much, but they still follow a nice pattern, that's a good time to do an option trade because you won't make, a lot off the 4% movements that it makes. But if you do options on some of these ones, then you can leverage your money in a different way and you can make hundreds of percent still. But unfortunately, if you want to do an option on Google, you have to have like $3,000 or somewhere along those lines. So we'll get to an option video later this week. Just wait for the timing and wait for it to be the right time and confident in our picks. Now, Google, when it was $1,400, $1,500 a share, this is when I was recommending it to buy it on this channel in some of my earlier videos. And when it was $1,400, $1,500, if you guys remember, if you're subscribed that long, I was saying that this was my favorite valuation on any big tech company at $1,400 to $1,500 a share. And look, now it's at $2,000 a share. Wow. So right now at $2,000 a share, I wouldn't say it's the best valuation out of the bunch. I think probably Facebook is probably the best valuation, maybe even Amazon. But I would say definitely Facebook, especially when Facebook was closer to $230, $240 a share. It's already risen a little bit, but I think it can still go higher. Now with Google, their PE ratio is 37, so it's still a great PE ratio. Market cap is 1.4 trillion, so almost the same size as Amazon. And look at their volume. They still have a low volume, kind of like the other ones that we were talking about. So remember, Amazon and Netflix also had the low trading volume. But this is, the biggest search engine in the world is going to be Google.com. They also own YouTube, the platform that you're watching this on. So YouTube's obviously huge. Google Ads, where all the advertising on Google is obviously huge. And I think it will continue to grow in the kind of like Facebook, like they add new users, small business owners are all watching YouTube. Every kid in America is watching YouTube. Small business owners are using Google AdWords to advertise on Google.com. And if you're interested in artificial intelligence, this might be the stock for you because they're actually a leader in artificial intelligence software and data software, just storing data. You'll search something on Google like, what's the weather outside today? And what does it say at the top right? 25 trillion searches conducted in the matter of 0.7 seconds. So imagine how much better that's going to keep getting over time. In the next 5 to 10 years, I'm sure all of these companies will be on another level. And that's what the mindset you really have to have with these companies. 5, 10 years from now, these companies are going to be taking over the world. So these are ones that you definitely want on your list. If you don't have any of these in your portfolio, you might want to do yourself a favor and pick out one or two. that you really want to go after and start investing in those ones. I think Facebook and Apple and even Amazon are great places to start. So that is the video. I hope you did enjoy it. We might be putting out an options video tomorrow if I feel the time is right. If not, we'll do an ETF video. But comment below on this video. Make sure you want to comment if you want 3 videos in a row. So if you want me to upload today, which is Tuesday, tomorrow, which is Wednesday, and Thursday, 3 days in a row, make sure you like this video and comment. Comment below which stock you like best out of this list. And I will see you guys in the next video. Remember, don't time the market, buy the market. Peace.